So it's more than possible to hedge out of any losing trade. Let's say you went long and the market is just falling against you. It doesn't have to be the case that you shove a stop loss in there and that's it. And the problem with that as well is many traders just keep buying. They'll buy and buy and buy with another stop loss and it'll get hit and hit and hit and hit. And it's a real problem, particularly risk management wise, because those losses are soon going to build and you really find a negative profit trajectory starts to ensue. So again, I'm going to show you in another live back test on FX Replay how to basically get out of any trade you've got wrong. So you take an entry, you're wrong, what do you need to do about it? And like I said, it's not the be all and end all a stop loss. You don't need to use one as long as your risk is very concise and also you understand how markets move between levels over time. Let's jump into it live on screen. So let's focus on how to hedge out of losing trades and create an overall winning position, really no matter what happens. You will have noticed on all the videos I'm filming on this YouTube channel continuously, no matter what the moves are on any market at all, we're always in net gains. And it's just because I know how to control risk. I know where you have good entries, good exits based on flip zone and other rules. So just make sure you take notes if you can, and we will go through what's needed really to make this work. Of course, if you want to learn how to do this, just go underneath the video. That's the best place you can go. So if I play this forward a bit, I've got the euro order up. Okay, so I think what we want to really do, coming into this level, you can see there's lots of wicks, tons of price action, is start to look long. So we've got a bit of reaction on there. So at this point, that is a drop from 151,664 straight down. So at this point, I could take something meaningful as a long, and I will do so with a 0.7, and I will get long. Okay, so my target is going to be right at what would be the most likely area for this to rebound, I would say. That's going to be about there, and I can decide to exit earlier if I get the opportunity. Of course, if this long fails, I could look at how to hedge out and end in overall net gains, which is really going to be the focus of this video. Now, I've also got the choice, obviously, to take another long because this fall now is taking me to this level where you've got price action within here. The fall from the former long now is coming on to a bit over 200 pips. So I could add something slightly more, and I would just make it sort of somewhat small, I would say, and I'll go for something like 0.3 long. So I've now got 0.7, 0.3, that's one total long within 200 or so pips. Now, if this goes wrong, as I said, I can look to hedge, and it didn't. It went straight to my profit target there on this entry, and I can also exit that one too. So some decent gains on board, and at this point, I would look to swap and go short. And this is really ideal because this represents a big mean reversion, so a push up away from your moving averages on your lower time frames. Okay, so you can see on the 1 hour, look how far away we are. And it's coming right into key support. You can see key resistance, sorry, you can see that across the board. So typically for me, this is a sell, but it's not a sell that is going to be large because the market is fairly low already. If I look at the long-term price trajectory, that's where we sit. We've had a big push down there, a big push down there. And you can see once we've hit these lows, we've rebounded enormously. So obviously, if I'm going to take the next entry, and I've seen that happen already once, I really shouldn't be shorting a lot here in case it happens again. Now, my target for this is just going to be a bit lower down here, I would say, for about 130 pips. If the moving averages catch up on our lower time frames, I'm going to kill it off. So if we don't get a push now, okay, that would have invalidated it. But nonetheless, if we are wrong, I can hedge out of this entry for ultimate gains. So now coming up here, I can look to add again. In this case, I've got 0.33 there. So what I may do, yeah, I think I'll stick a short slightly higher if we can push a bit more. Okay, so I missed the entry slightly, I will admit. But I can add something long now, and I will do that. Now, the entry I'm just adding long is going to hedge part of that 0.33 short. So now on this push up, I've got gains of $400. And even though I'm down 995, I've still got, coming on to half of that back in profits. And I've got the opportunity now to take another short. So I'll just do this lightly again, because the target in this case is fairly nearby. The 200 MA has been hit, and we've got the opportunity to short, but it looks like this is probably going to be a 4-hour move, probably back to 4-hour local moving averages. So something like that, maybe 80 odd pips is my target. We haven't quite got that, and that would have invalidated the trade. But obviously I'm playing it fairly quickly, so it's hard to catch. But again, like I said, it doesn't matter, because I'm going to hedge out if I'm wrong. So there's a 0.5 in play there. Okay, a nice push down. I will just leave that in case we get a bit further. If we don't, of course, I can hedge any dips. So I will kill that now, and I can take a light hedge long. So if you look at my balance over here, and the realized P&L, we're still in a good spot. Even though we're down on these, we've taken some decent gains already. So I've got 0.66 in play short. I can actually just hedge 0.2. So coming on to a third of that, and that would be suitable really. And any pushback to the high at 1557, I can set target. So we just missed that. Okay, we got it there. And I can just add another short lightly, because the market's a little bit sidewaysy here. And I'll add another hedge long. So I've accumulated some long gains just to help me offset the shorts I'm wrong on. Okay. And you can now see the market is just pushing and pushing. So I can take another hedge long. And this is really where you get the most of a break, is when the market does things like this. But I can now, if we pull a bit lower, I will just get rid of that. And I can hedge again 0.2. So now I've hedged more than the short side exposure, but I can kill that one off fairly early. I can hedge again 0.2. And I really want to make use of these sideways small movements, because they're going to help me stimulate a lot of gains. And we've pulled lower again. So I'll just spread another 0.2 there. And again, because I'm playing it so quickly, I am going to miss the opportunities to close. I think I'm going to slow it down, because I'm missing a lot of entries I could take. But obviously, if we did this slowly, it would take a long time. So finally exit that short. I've now got 0.2, 0.2, and 0.2. So I will probably save another long until down here. And at that point, I'm going to go slightly heavier. I'm going to go for something like a 0.4. I'm going to put a market limit long. And it's going to be near 147, I think. So 147 there. Just on a push. Okay, we're in. So my target really is just going to be back near that former long. And ideally, somewhat of a flip zone. So like that. Yeah, I'll have it in there. That's fine. And now if we keep falling, I can look to hedge. So this is the kind of place I would look to get into hedge mode, because I'm wrong on those longs. And because the price is very low down on this fall, I'm just going to make it really, really small. It's just going to be a 0.1. So, a quick $50 there, and I can keep doing that. And on a more reasonable push, I can then take a much larger hedge and a much larger short. So a push up, so market's climbing a bit. I'm just going to add a tiny short again, because I don't really need anything massive here. These are just little gains here and there, just to bulk up where we stand. So I can get rid of that as well. So I've pulled a long off now, as you can see. I'm actually going to add 2 of these longs again, just because the market looks like it's supported to the upside slightly. Okay, so I can kill these off. 1, 2. And at this point, I can add something slightly higher for short. So what's happening now is I'm just taking trades both sides of the market just to pick up gains that are going to give me the edge overall. If I was only trading one way, that wouldn't really be possible. And the strategy would sort of break down. So at this low, because the drawdown's climbing a bit, I'm going to add another 0.25, but I'm not going to go any further than that. because if we break these lows, we could be in for a larger fall. So I'm going to let this ride if it can a bit. So there's some gains. At this point now, I'm going to take a hedge short. So I'm taking out some of the exposure. I've got 0.15, 0.2, 0.2, 0.2. So I've got about a fifth short at this point. I can take that long off to protect myself a bit. And on a further push, okay, so I can take another long. I can kill that one. I can take another short. Okay, and now we're getting back into the realms of safety. So market pushing again. I could have taken that long, but there's a few short gains there for the hedge side entries. Push there, bit more there. Take another short. Okay, so now just accumulating some gains, both sides. A little dip here back to MAs. Push under that with that short is going to provide some hedge gains and a little bit of relief. That's a nice push. This is out the money, but we've collected a lot of gains already. I think I will take a light short here with a lower target of about 147.7, I would say. And again, lots of people ask me, well, why, you're not talking about the specifics, the sizes, targets. That is true, but I have to keep it fair to everyone who pays me. I'm afraid that's just how it goes. But you will learn a lot in these videos anyway, because I don't leave, I don't leave sort of the core out, I guess. But every intricacy that's going to make this work, obviously, I sort of have to. But that's just how it goes. So a push up again or a push down, doesn't really matter what we get. We can see the balance and the overall drawdown is still not enough to put us into negative equity. And that's just because I'm trading both sides. Like I said, I'm not always long, I'm not always short. I'm taking both. So at this point, I don't really want to add anything long until I've got the means to do so. I'll kill that short. In fact, I'll tell you what, I'll take one long because I've accumulated decent gains. On a larger push up, I would have killed it, but now we're going to be in hedge mode mostly, I would imagine, because we're pushing into what is now going to become drawdown. So I'll take a 0.15 hedge, kill that off for very slight gains, take another one, kill that off for more gains, and okay, so now we're going to hedge on any push again. Okay, and the fact we've accumulated a lot of gains already is always going to help. So I'll take another hedge. And at this point, I could consider just closing something. And I will just take that one off just to lessen the exposure in case I'm wrong more. And I know I'll get some of it back. Okay, so that was a good choice because now we're falling through again. Nice push up. I'll take another hedge. Kill that, $85. And we're still in positive equity despite the fall, which really reflects the extent, I would say, of what you'll see in Forex markets. That would have been handy. So I couldn't catch that, obviously. In real life, I would have used it to hedge again and shut that long out. And probably I would have closed some of these longs as well. So that must have been a new sentiment flash or something. But nonetheless, we're still picking up gains, no matter what. Okay, good push there. Lead to another hedge. Very small there. I'll take that off. And again, now I've got gains in the bank. I could do something to reduce my exposure. I could just kill that one, to be honest, and take something much larger down here instead. So I've spent some of my hedge gains and I can now kill that one off. And now I don't need to hedge as much. So a light hedge here, push down, take another entry long, slightly larger because I removed some of my exposure, kill that off for $400, take a light short again, and really we're just saving ourselves for when the market has a larger rebound to the upside. So take that off again, nice gains there, take a 0.2. So I'm dropping the size as you hit the low more times because the probability is going to change, most likely. In any case, there's gains there. So you can see no matter how wrong I am, and how far out the money I go, it's never going to be a threat. I'm always collecting enough in hedge gains to sustain myself. So I can take another short, and at this point I've got 0.55 versus 0.36, long versus short. So more gains there. Nice pullback to MAs for a long, and key support. Needs a bit of a push, really. Otherwise, we're just going to have to keep hedging. So more short gains there. Push up and I'll hedge again. So I'm not going to add any more longs. And we're really just waiting for a larger long side retracement at this point. I'll add another short. And if we can pop again, I'll add a bit more higher. Okay, there's a bit to the downside. So we've really fallen. If you look at the distance, 154 to 140, and there really is no threat on drawdown. Okay. I mean, I'm only now going into negative after all of that. Now, that may seem bad, but it really isn't, because the ultimate push will come to the upside where I can re-hedge a larger size and I can exit everything. But because I've stimulated so many gains already, I can maintain these falls, if you like. So I'll take another one there and slight push higher there for a short, 2 MAs. Anything back up again, I'll add. So this is a good example of how to hedge out of anything, I guess. There's another $60 or so. Another short. And on a much larger push, we can start to work out of what we had previously. So $63 there. And now we're back in positive equity again. So I'm just maintaining my capital now. And ultimately, my investment, if you like, will come true once the market rebalances. Essentially, once you get a much larger push that takes you back through your longs. And in the meantime, I'm just going to make all the money on the short side. There's another push up and straight through that for $86. Okay, now at this point, I can add again short. Got another 86 there. So a bit of gains on that long, or those two longs. And now you can see we're getting much more rebalance. If you look at the equity now, it's coming up a lot. So I can now add something larger, short, like a 0.3, because the market is now rebalancing, as we said. And that means on larger falls, I can now take some gains like that. I will just reduce a bit. And now, as well, I can take that $1,000 off. Okay, so I've taken out some of the long exposure. And now I can look to work my way around this. So if I take a short at there, okay, I can keep trading like this. The market is fairly mean in terms of average at the moment. So I'll take that one off. I'll let it ride a bit. And now, if I want to, I can clear that long up there, which I will. So I'll take that long out and I can now short. So this is the rebalancing that I was talking about. And, like I said on various videos, if you look at the drawdown we've ever had, it's basically nothing, and I can now just hedge to the long side. So there we go. And I can just keep doing that. And now the market is completely reversed. the job I now have is basically what it was before, in reverse overall. So on a bigger push, I can get long again. So back to your MA there, key MA, long. And now we've got a big fall. I can kill off that 890. And now the market is a lot more, or at least my positioning is way more balanced. I can now take something like 0.2 because I've got the equity saved, if you like. Okay. And we can look at the equity curve in a minute because, yes, it has been a period of time. Okay, but the drawdown has been basically nothing. There's been no stress. The market has moved completely against me and it just doesn't matter. So it really doesn't matter where we're going. Like I said at the start, at any time on any asset, you will always be in gains as long as you can manage risk. And like I am, just hedge effectively. So if I take another long, just to lightly hedge those former entries, I can then do the same thing there. Okay, that's a good push down. I could even kill that one, take another long. And now what I'm doing is I'm just trying to wind the cycle down. So I take that loss out. And now I can hedge. The drawdown is less than $1,000 in play. Kill that one. If I want to, I could just take another short. Okay, very small gains there. But at this point, if I just exit everything, there you go. So it's I can't lose money as long as my sizing's right, my hedging approach is correct, my positioning's right. Doesn't matter how wrong I am. I can just keep an equity curve that looks like that with hardly any drawdown. 87% win rate. Okay, so I could have had much larger sizes. Anyone who comments and says, wow, it's only 4,000. Yeah, it is, but the sizes were minimal and the drawdown was nothing. So you could have put your sizes up. You could have managed it differently, but this is a no stress positive equity curve. Okay, only it drops when I start to close out all the positions, but I would just continue the cycle again and it would just keep going up. So it's better, I would say, for a lot of people who don't want to use stop losses. That is the alternative, but it works well. You've got all the stats. Basically every month you're up, you see. I mean, you do have some dips, but overall the gains are much better than the losses. And you can see that, okay? The sizing would just come down to your approach. Remember as well, you would be trading a multi-asset portfolio. So you wouldn't just be trading this one asset. You would have various assets, and therefore the gains would rise again. Okay? So there's a bit of inference there, but that's a good demo on how to do this. Like I said, if you want to learn, we can show you. We teach it all week. Go underneath. We've got a room full of professional traders who have done great with us.